for the futures trading, if you want to learn how to trade the futures, then using the limit delta, the isolated and then the cross margin. That's you. Okay, this is the limit here. You click here. That's the limit. Limit allows you to input any amount you want, any amount of the amount of price you want a particular coin to fall into before the exchange automatically buys it for you. So let's do okay. Let's just do 0.3020 for ENG. Then all that means the amount of USDT you want to buy with a coin. Sometimes you can just use this function to either use 25%, 50%, 75%, 100%, or any percent you want for your portfolio. That's all. So okay, you can only use from $5 upward. So what are we doing now? I don't want to use much for this trade. Let's just use that percent. Then you can, for if you want to put it, take profit on a stop loss, click on this box, click on this plus button. If you are longing it, that means you want the coin to go higher, you click on long. If you want it to go short, like it's coming down, you click on this short here. But this market, I just want to put a sharp long. So you put in the price you want it to take the profit, like to close the market. Once it reaches that price, so you can just put in 30.30. Then you can see it beside it here in the percent. That means you'll be getting a 3.31% on your capital. Then for the stop loss, where you want it to reduce your loss from, maybe let's say 0.2, it means you are taking almost all percent of your capital. That's like x3%. So you have to make sure that it is always lesser than 100%. I can just use 87% because I'm sure the market won't be going up to 0.27, and you can even use lesser depending on your market strategy or your analysis. Shouldn't always go to this percent, and sometimes just know that to avoid liquidation, your stop loss shouldn't be 100%. It mostly shouldn't even be far from your entry level sometimes also. So the next thing you just have to do, the same thing goes for if you're using a short. That's it. So okay, that's changed. We said 3.31, right? Okay, 87%. Okay, so then you confirm here. I'm just using the percent because I can remember the percent well. Then so let's just click on the confirm button. Then since you've input your take profit and stop loss, you can just then click on the buy. Since you are longing it, you are buying it, that it will go up, you can click on the buy. And also this is the leverage. If you want to use a 10x leverage, a 5x leverage, it just means that if you are using $1 capital and you're using a 10x leverage, that's equivalent to $10 you are using to trade on the futures. If you're using a $5 leverage, that's like 5 times your capital. That's just the meaning of it. And if you're using a 25, that's 25 times the capital you're using to trade. That's all. So just know that the higher your leverage, the higher your profits and the higher your loss. As you can learn more from here to know what leverage means. You see, leverage trading allows the trader to open both long and short positions, and long or short more than his wallet balance. Both profit and loss will be calculated if a trader takes more than 1x leverage. That's what it means. So if you're having $3, you can be trading, you can buy a coin worth of $30 to trade with. That's the power of the leverage. Then for cross margin is using all your portfolio against the trade. Meaning having $3 now, if I take a trade and I use $1 as a capital for the trading, if I'm entering a loss, my stop loss won't be triggered because I still have a capital here that it is using. That's it. I have a capital here that it is using to trade. So that's why it won't hit my stop loss immediately. But if you want it, you can use isolated margin. It only trade on the capital, on the fund you give to it. So you are trading with $1 and a leverage of $10. That's an leverage of 10x, sorry, that's $10. So you are trading with just $1 of your capital. If your stop loss, if it goes to your stop loss, it will hit your stop loss. So that way you are reducing your liquidation level. You only trade with the amount you want, but in cross you trade with all your portfolio, all the USDT that is under your futures trading portfolio. That's it. So what else we need to No, I think that's all for here. If you want to take on another coin, click on this place and then you can pick any coin of your choice to trade from. That's all. So let's click on the long. Then you have to confirm it. Confirm you are using the correct everything, the correct setup and everything. And you can see my estimated liquidity price timing first is good till cancelled, as it is good until it reaches my sell loss, which is 0.276, because I'm using a cross margin. If I'm to use liquidity, okay, let me do that because I'm having a trade already and I want to disturb that trade. Because so let's just go for the long now. Then you can see that everything has been calculated here. So now let's confirm. Once you confirm it, you see your order here. So immediately your order, immediately this price, it's 30.20, which is around this side. If it comes down around where this blue line is, if it comes down around where this blue line is, your order will be triggered and then your trade will become active, and your trade will become active. That's it. And if you want to change your price entry or anything, you can always do it from the chart here, just by clicking on this chart and moving it up or down, anyone. And you can change your order here and then your take profit and stop loss. That's all for that. So the trade is still not yet active because the price has not yet gotten to 30.20. So we'll wait for it. So that's all for trading futures. And same, okay, but for markets, it does not need you to enter the price of the coin you want. It will enter at market price. That means if I should place this trade now, it will enter it immediately at 30.40, immediately without wasting time. That's the difference between the market and the limit. These are the most commonly used orders. That's all, guys.